Hello, everyone, and welcome to the third video of the series. This is really important because we're going to discuss the core content of AASB S1, what to disclose for robust sustainability reporting. This is the heart of AASB S1. Understanding what to disclose is critical as understanding why and how. AASB S1 defines four elements that make up the core content of a robust sustainability reporting. What we had discussed in Capsule 2 was the foundation of a good sustainability reporting disclosure. That is, having established fair presentation, materiality, and connected information. Now, we're going to focus on the next four key elements. This is the core content framework for our comprehensive disclosures. The first one is governance. This is the backbone of oversight. Give stakeholders confidence in how sustainability is managed at the highest level, enabling users to understand process, controls, procedures for overseeing sustainability related risks and opportunities. Now, below are the key points we should disclose. A. Governance bodies. Identify board committees or leaders responsible for sustainability oversight, including how responsibilities are built into role description and mandates. Look at the skills and competencies. How the organization ensures appropriate expertise are managed and how often leaders are updated on sustainability matters. Third, integration role. How does a board or committee members integrate sustainability into strategy, business decisions, and risk management, including trade-off assessments? And fourth one, management involvement. How responsibilities are delegated and sustainability controls are woven into internal functions. The next part is strategy, charting the course for risk and opportunities. This is central to understanding how an organization plans for and manages sustainability related risk and opportunities over time. The core disclosures should include risk and opportunity description. Specify specific sustainability factors that could affect prospects, including materiality, timeframes, and planning horizons. Business impact analysis. Current and expected effects on business model and value chain, highlighting risk concentration by geography or asset types. Define strategic responses. How and which factor influence strategy and decisions, current responses, and the future plans and progress against previous commitments. Then there's financial impact. That will include current and anticipated effects on financial position, performance, and cash flows with qualitative and quantitative information. And finally, resilience assessment. This is strategy and business model resilience against sustainability risk, including approach and time horizon. The next one is risk management. This would cover how risk and opportunities are identified and prioritized. Provide insights into processes used to identify, assess, prioritize, and monitor sustainability related risk and opportunities. Required disclosures include process explanation, detailed policies and processes for identifying, assessing, prioritizing, and monitoring sustainability risk, including data source and scenario analysis. Then there is risk prioritization. How does sustainability risk are prioritized related to the other business risk and how the same are monitored over time, including changes from prior period? Then we have opportunity management. This includes similar processes which has been applied to identifying and managing sustainability related opportunities. And then the framework integration, degree to which sustainability risk and opportunity management is embedded within overall risk management framework. The fourth one is matrix and target. This includes measuring and tracking progress, the means by which organizations communicate how they measure performance and progress on sustainability related risk and opportunities. The expectation of the disclosure are following. What are the required matrix? Matrix from relevant Australian sustainability reporting standards plus additional matrix used internally by the entity. Use professional judgment. When no standard matrix exists, use globally recognized framework like SASB standards and disclose rational methods and limitations. Entity developed matrix. Include the definitions, absolute versus relative nature, third-party validation, and key assumptions. All of these must be disclosed. Then we have target setting information. This is quantitative, qualitative targets, periods covered, base years, milestone, performance updates, and explanation for changes. And then we have consistency over time. The matrix should be clear, should have standard definition, and should be consistent over the period of time so that figures are could be compared whenever it's practical. So what's the complete picture? By carefully covering these four content areas, entities offer a holistic, credible, and comparable picture of their sustainability journey. This structure enables primary user to assess how sustainability consideration are woven into the fabric of the organization. So we get a holistic view. That's a complete picture of sustainability integration across the organization. The reports are credible, trustworthy, and the primary users of these reports could make decisions. The data should be comparable, smart resource allocation, which means it should enable informed decision making by investors, lenders, and creators. And finally, it should build trust with the users of financials. Thank you so much, and I want to see you in the next video of the series.